Hey everybody, I hope everyone's doing well and had a good day. In this video, I'm going to review the first couple of hours of the Emini 5-minute chart for Wednesday, January 22nd, 2025. So going into the day, a couple of things I want to look at. First, look at here's the daily chart. This is the Globex chart, so we're going to see less gaps if we looked at the regular trading hours only. The chart would have a lot more gaps, look like this. I think it's just easier on the eyes, easier to read the chart without the gaps, but the gaps are the same as a breakout. So wherever you see a gap, you're going to see a breakout bar when we look at the Globex session. And I prefer to look at that. So here's what we had going into the day. My first thought, a couple things. One, we had 3 legs down here. And I thought we've been rallying for a lot of bars, but we're starting to get deeper pullbacks, especially here. This was disappointing for the traders who bought above. So if you bought up here, the market's rallying, but then we enter a tight trading range. Huge bear breakout relative to these bars, trapping a lot of traders. Second leg down likely. We retest the breakout point. We get a couple more legs down. We got 3 pushes down. The last one subdivided into 2 legs. So 1, 2, 3, and here 1, pull back, 2. And now the market's rallying. The bulls see this as a bull flag. They see a wedge bull flag, and it's a bull trend. A couple of attempts to reverse, but bad follow through for the bears. And is this a major higher low? It might be. Some traders might not consider it a major higher low. Some traders might consider this to be the major higher low, and the market is still above this price. So the bull trend argument is still on for the bulls. For the bears, they're hoping it's a trading range, at least, if not a bear trend and a major reversal. But we've had a couple attempts down. It's good for the bears that we broke the bull trend line, but now we're probably going to get a retest as we're getting here. And it's really important to assess the strength of the retest of the trend's extreme. Because if you're a bear and you're looking for a major trend reversal to sell, you don't want to see trend resumption as strong as this, at least in my opinion. To me, this looks like a strong enough breakout for a second leg. And yes, we're getting to an area where traders were trapped, this tight triangle up here, probably sellers in this area, but we're rallying quickly. We might need to make a higher high before the bears attempt a major reversal. And here, the bears lacking big consecutive bear bars. There's a big bar here. These are okay, but within a trading range. Not as good as it could be for the bears, but this does look like a trading range to me. I think ultimately we'll find sellers at a new high if we get there. But going into the day, we have momentum for the bulls. The bulls seeing a breakout of a bull flag, wedge, bull flag, breakout above the bear trend line. And then the bulls ultimately would like some sort of measured move up, which might be something like that. Of course, that target is huge. But first, the bulls would like to get to a new high. And then for one other thing before I get into the 5-minute is the Globex session, because whenever there's a big gap, we have a big gap up here. Here's bar 1, here's the close of yesterday. We don't know what happened in here. We don't know if the market was in a trading range, big up, big down, big up. We don't know if it was a strong trend overnight. So I always like to look at that, especially when there's a big gap. I like to look at the 15-minute. So here's the close of yesterday. Right here, this is the start of the Globex session. we have a pretty steady bull trend. It's a bull channel, nothing too climactic, maybe a little climactic here, but a correction, sideways pullback, continuing higher. To me, the market's always in long, going to have more of a bullish bias going into the day, but open to anything. Price is truth. And then for the 5 minute today. So a big gap up, you can think of it as a breakout bar. So a gap up, probably going to get a second leg up, but disappointing follow through on the open. It gapped up, broke out far above the prior day's high, the 20 bar moving average, and all the bars to the left. But now we're getting bad follow through, so we might need to pull back to find buyers. Bar 1, not a good stop order buy, probably more sellers above the bar. You also get a trading range on the open 80% of the time. So every day I'm expecting a trading range on the open. Inside bar on 2, so we're getting trading range price action. Prominent tail on bar 1, inside bar on bar 2, so reversal and then range compression. There's not much volatility. We're getting a lower high and a higher low. Inside bars it's basically a triangle more clear on a lower time frame chart. And it's breakout mode, but probably sellers above and buyers below. For me, again, with the Globex session, the daily chart, and the gap up, a little bit more of a bullish bias. I'd rather look to buy below than sell above. 3, bull reversal bar. It's a micro double bottom. It's actually nested too. Down, up, and even on bars 2 and 3, down, up, down, up. So we've tried 2 or 3 times to reverse back down after the gap up, but it looks like we're failing. And then bar 3, bull bar closing on its high. Going into the day with yesterday's price action and the gap up, it's probably always in long. If you sold for any reason, probably exit above bar 3. Too much risk that we test above bar 1. And we might go for 1 times the risk of bar 3. Bulls can buy above 3 for a swing. And again, second leg up likely. Gap up, pull back, maybe get a second leg. 4, good follow through for the bulls. It's not ideal. There's a small tail in the bar, so instead of buying the close or buying above the bar, traders bought a shallow pullback. But the pullback is shallow. And there's a bear trap. If you sold below bar 2 on a stop order, bar 3 triggered the stop order and then reversed up. Bar 4 did not come back to that level. So we have trap traders below here. That's good for the bulls. Consecutive bull bars, still always in long, better to be long, and okay to hold long until the bears give us a reason to sell. And then bar 5, an even bigger bar. So the bodies are getting bigger, momentum getting stronger for the bulls, and it's all good for the bulls. Now we're breaking out above bar 1, breakout point here. Traders expecting the bar 1 high to be resistance got trapped on bar 5, and that's going to shift the resistance above bar 1. It gets inverted. So what was resistance becomes support. You expect resistance above bar 1, we break above it, trapping traders, and now there's probably buyers at this red line. 3 bar bull micro channel, all the bars closing on their highs. You know it's a channel on a smaller time frame. You can see the tails. We're pulling back, but strong enough breakout for a second leg. We just might have to pull back first. And then 6, a smaller bar. So now a 4 bar bull micro channel. Strong enough breakout for a second leg, but you can see the volatility decreasing. The range is compressing. Bigger bar on 5 and then smaller bar 6. So you might have some traders beginning to reduce their position if they bought. Their stop is below 3. They're buying, say they buy the close of 6, or they're long anywhere, and then we get the close of 6. Target up here, stop down here. And because we're losing momentum, some traders might reduce their position size and look to buy a pullback instead of buying closes. But still buy the close, okay to be long, okay to hold long with the wide stop. Whenever you have a wide stop, let me back up. When you have high probability of a second leg, like here, there's a high probability that the bulls get a second leg, probably at least 70%. Whenever the probability is high that the market is going to do something, generally the stop is going to be far. So probably going to get a second leg up here, but your stop is all the way below 3. If you put a stop below 6, that's okay. It's a tight stop. The worst place to put a stop is probably the bar 1 high, maybe even below 5. These are more skunk stop locations, just in the middle. And let me just turn off the snap. Bar 7, outside bar. You can see where bar 7 tested. Bar 7 tested the high of bar 1, the breakout point. There's a gap here. We tested it. We still have a body gap, or a negative gap, both terms meaning the same thing. There's spaces between non-adjacent bars. If we look at the breakout point, bar 1 high, and we look to the left, and there's a space from the close of this bar 5, to this high, and it got even bigger. Again, that's just the trap traders here. Selling here, you're trapped into a losing position. You don't buy here, you miss out on the rally, and that creates support below. So we test it quickly and rally on bar 7. 7's an outside bar, and it broke out further below bar 6 than above, and that's a little more bearish, even though the bar closed above its midpoint. So a little suspicious of bar 7, but still always in long. Still a strong enough breakout for a second leg. We got a pullback. Probably going to start the channel phase soon. Or technically starting the channel phase now, because we got a pullback. So probably losing momentum, and probably sellers at new highs. Bulls taking profits and bears looking for scalps, but still not much reason to look to sell yet. Bar 8, it's a bull doji, still a bad sell signal bar. Would you sell below bar 8? Probably not. Tight bull channel, bullish environment, the signal bar is weak, probably buyers below the bar. Same with bar 9, breakout to a new high, we're finding profit taking, sellers at the new high, and that's to be expected. Spike, pullback, and now we're channeling, but this entire rally from bar 3 to bar 9 is tight, and that tells me it's a breakout on a higher time frame. So we might get a spike, pullback, channel, maybe retest the bar 7 low, but this entire breakout might need its own second leg. But in terms of the smaller perspective, spike, pullback, channel, now we've had maybe 1, 2, 3 pushes up, or you can call it 2 pushes, 1, 2, but the upside might be limited here. And then bar 10, a stronger bull bar than 7, 8, and 9, and that's a little suspicious because it might be a late leg, and that's all. It can be really subjective. If you're counting legs with spike breaks, which is a technical pullback, when 7 falls below the low of bar 6, then it's leg 2, 1, pullback, 2. If you're looking at the implied legs on a smaller time frame, you're looking at the tails, failed breakouts, tried to break out here, failed, tried again here, failed, trying again on 10. That's already 3 or 4 pushes up. Now we're getting the strongest looking bull bar, but this might be, again on the smaller perspective, a completed market cycle. Breakout, pullback, and channel. 1, 2, 3. Might be sellers up here. This might be the start, or this might be the top of a trading range. We might have to test all the way back down to the low of bar 8, if not 7. Bear bar closing on its low. On bar 11, that's a bar I think it's reasonable to exit longs below, because too much risk that we can fall to the bar 7 low. We're far above the moving average. The more we start to go sideways and lose momentum, the more bulls would rather look to buy value, look to buy lower, rather than buying far above the average price. Because if you're paying far above the average or fair price, you want to see above average bullishness. If you start to go sideways, big bear bar closing on its low, that's not above average bullishness, and this might be enough to disappoint traders. Think about if you bought the close of bar 10. Traders who bought the close of bar 10, let's move this, they're disappointed with bar 11. You buy the close, that's your entry bar. You're thinking, darn, I was wrong. I thought we were going to go higher, buy the close, bull trend. Then we got a big bear bar closing on its low. The reality is, if you buy here, use a wide stop, either below 7 or 3, scale in lower, you're probably going to make money, or at least be able to avoid a loss. So if you don't panic, you can look to scale in lower. You're probably going to retest the high close of 10, if not, make a new high of the day. But to me, bar 11 is strong enough for a second leg down. We have 3 pushes up, and it's a strong enough breakout bar to disappoint traders above. 12 was bad follow-through for bar 11, but it also could be viewed as a pullback, maybe a 50% pullback of the bar. Breakout on 11, pullback 12, bears looking for a second leg down. But if we get really into the details in here, this middle line, that's 50% of bar 11, and 12 rallied above the 50% pullback of that breakout bar. The breakout bar itself really isn't great if you're looking to sell here for a scalp. Really not ideal conditions. You think about the environment, all the bars completely above the moving average, bull trend day yesterday, rallying on the higher time frames. And when's the last time a stop order bear made money? You'd have to look all the way back to maybe 57 yesterday. So really not ideal to be looking to sell here. In other words, this is probably a minor reversal. So 11 is strong enough for a second leg down. It's strong enough that it'll disappoint and trap traders above. We might go into a trading range or correction mode. We might get a bull flag here, but this is unlikely to start a huge bear trend. And then 13 could be the second leg down for the bears. Bear breakout 11, pause bar 12, implied pullback, and then second leg down 13. 1, pullback 2. The traders who sold the close of 11, disappointed on 12, they had an opportunity to exit at break even. If you sold the 50% pullback of bar 11, you got your second leg. And that's basically the expectations the bears had. They're not expecting a major reversal. So the traders selling in here are scalping, and they're probably, I imagine it being the high frequency trading firms that have computer algorithms. I don't think humans are, well, I shouldn't say that. There's definitely scalpers out there. But I don't know, I think about what Al says, and this is a personality thing too, I guess. But I remember in the third book, the reversals book, right at the end, he talks about, I think it's in the section putting it all together. He says, you will not make money until you stop, or what is it? Something like, until you stop trading minor reversals, you will not make consistent money, or until you start trading with trend pullbacks, you're not going to be consistently profitable, something like that. So it's much more important to me to think about the bigger picture. This bull breakout is probably going to get a second leg. This is a minor reversal, and while it's strong enough to get a second leg, and that's because price action is fractal, 13 might have been that second leg. So this is almost like a completed market cycle here. Bar 11 breakout, 12 pullback and channeling down, and then double bottom of the trading range. 14 reversing back up. Now we might have to test back up higher, and if this is a minor reversal, we can get to a new high. We can even maybe get a measured move up. Traders betting this is a bull flag. But we'll see. We have to see what happens at the close of bar 10. How disappointed are the traders who bought up here with bar 11? And we can see what happened on 14. Broke out to a new high, but back here, remember this is the beginning of the channel phase. Breakout, pullback, now we're channeling. How do markets behave in channels? In a bull channel, bulls buy sell-offs, and they take profits at new highs. That's what we're getting. There's a sell-off on 11, traders bought it. We rally to a new high, and traders are selling, taking profits. So disappointing bar for the bulls. We tried to break out, but failed. Now it looks like a trading range, we might have to retest back down here. And maybe it's breakout, leg one, pullback, and then a second leg down. But to me, it does not look like bulls are buying the new high with urgency. It looks like the traders who bought the close of 10 are disappointed and they're looking to buy lower. But as far as selling below 14, it's a weak stop order sell. It is a double top, but one bear bar in the past 10 bars or so. Weak signal bar, probably minor. But I think okay to be flat here. It's still always in long. If I had to choose, I'd probably prefer to be long, but we might be in correction mode, so we might have to go lower before traders buy again. 15 an inside bar, but it's an inside bar. It's a trading range bar, so it's a trading range within a bigger trading range. This trading range might be a bull flag, like I said. It might just be a bull leg and a trend sideways, and then we break out to the upside. Still okay to be long, but the bulls need to get the breakout. And they're not getting it on 16. So we have an II pattern. It's just range compression. It's a triangle, and sort of 50-50. If we're going sideways for 6 or 7 bars, this far above the moving average, think of it this way. How thrilled are you? I'll give 2 examples. Where are we? Bar 16. So let's say you see bar 5, you buy the close. Might be a buy the close rally, 3 consecutive bull bars closing on their highs, and then pretty good follow through. Deeper pullback than you want here, but you make money over the next 4 bars, 5 bars. Now think about the same logic if you bought the close of 10. Immediate disappointment. Whereas if you bought the close of 5, at least the market went higher, and then the market went sideways for 5 or 6 bars. And that's pretty disappointing. So I keep saying it, but what I think here is we're going too sideways. We're losing momentum. So the bulls buying because of momentum, they're losing their reason to buy. And if you're buying this far above the average price, you need a reason to do that. You need momentum or above average bullishness. To me, this is just tight trading range behavior and sort of 50-50. Now, there's probably a bullish bias for the breakout direction because it's in a bull trend. Breakout direction probably favors the upside. But II pattern, that's a common final flag. It's a triangle, tight trading range. It might be late in a trend. We had a bull trend yesterday. Spike, second leg, maybe a very small third leg. And the bare minimum for the bulls, breakout, pullback, second leg. So again, still probably always in long, but it might be correction mode. Bar 17, bear breakout. It's a breakout and a pullback. It might be a sell to close bar because we're in a good distance below 16. Traders who bought below 16, disappointed with 17. And on a smaller time frame, it might just be a breakout pullback. Second leg down likely after double top, triangle, and then a couple bear bars. It might be a second leg trap, 1, pullback, 2, which subdivided into 2, 1, pullback, 2. And let's see where we tested. The bar 8 low was a magnet. We didn't quite get there. We might have to. And then I also like to look at stop orders because there was a trap on bar 7. If you're a bull, long for any reason, you put your stop below 6, you got trapped out on 7. And if you're a bear and you sold below 6, you got trapped into a losing trade on 7. And this area here, because we rallied, becomes support. If we retest here, those trapped traders are going to be looking to buy. But it depends on the approach, and so far this doesn't look too strong for the bears. Lots of trading range price action, tails below bars. Inside bar 18, 3-bar micro channel, strong enough for a second leg down. At this point, still looks like a bull trend until we start to go sideways for 20 bars. It's probably a bull flag. But after 3 consecutive bear bars, it might be better to look to buy a second reversal. So let the bears get their second leg, just step out of the way, and look to buy a second reversal for trend resumption. 19, another bear bar added to the micro channel, so 4 bars down, strong enough for a second leg. Probably first reversal, probably minor, And because of that, if the first reversal attempt is probably going to fail, then a second leg down is likely, and you could even argue that it's always in short because the bears should get a second leg. But always in is tricky because everything has an opposite, and there's always going to be opposing views of the market. And you're going to have, think about it, there's a buyer and a seller on every tick, and they have good reasons to take the trades that they take that are supported by statistics, mathematical basis, and logic for what they're doing. Because of that, you have a bear thinking strong enough breakout for a second leg, it's always in short, I'm going to sell, I can scale in higher, and at least if I scale in I can avoid a loss or make money. Then you have a bull thinking gap up and follow through, weak reversal attempt, it's still always in long, this is not enough to convert the market into always in short, we haven't even touched the moving average, so it's still always in long. Even if you buy up here, use a wide stop, and don't panic, maybe scale in, you're probably going to make money. So for the short term traders, and this is kind of it's an imagination thing for me. I'd imagine, I don't remember why I started doing this, but it helped me understand how markets are fractal. Remember that if you don't know that this is a 5-minute chart, you can't tell me that you know this is a 5-minute chart because price action is fractal. And if I didn't have the label up here, 5-minute or weekly, daily, 15, there's no way of knowing because it all behaves the same. And because of that, there was a time where I would imagine that the 5-minute chart is the daily chart. And I almost felt like I was removed. I was in a different dimension. I'm in a dimension higher than the traders within these bars. Because if this is a daily chart, then there's 81 5-minute bars within each of these bars. And there's a rally, there's lots of bull trend days in here on the smaller time frames. And that means in here, it's more of a channel. This is more of a breakout, a stronger trend, but here, bear channel. But if you go down to probably a 1-minute chart, maybe even smaller, this is a bear channel. It's probably always in short. So for these traders on the smaller time frames, it might be always in short. First reversal, probably going to fail. Second leg down, likely. But big picture, this is hardly a pullback. If you think about the entire rally from the gap up to the high of the day, it's really a small pullback. So those traders on the higher time frames think this is a minor reversal. So that's how you can have traders seeing always in long and always in short at the same time, which might sound confusing. And if it does sound confusing, just take more time to think about it. 20, bull breakout, but like I said, 4-bar bear micro channel, strong enough down for a second leg. First reversal probably will be minor. It's a trendline break, good for the bulls, but now we're probably going to get a retest. But there's probably buyers below 20. 21, second leg down for the bears. Now, 21, to me, looks a bit like a second leg trap. 4 bars in leg 1, pullback, and then a strong, sudden second leg to a new low below this swing point. And that's sort of characteristic of second leg traps. And if we think about the context, look where we're testing. The stop order below bar 6, which might be the bottom of a trading range. Spike, pullback, channel. Channels evolve into trading ranges. Now we're at the bottom of the range. Might have to go a little lower, maybe the bar 7 low, bar 1 high, same area. But this is probably support. You add on top of that, how many attempts down have the bears had? It's a nested wedge, 11, 17, or 19, doesn't matter, and then 21, and then here, 1, 2, 3. So it's a nested wedge, nested 3-legged pattern at support. Then you got the moving average coming up as well. So really dangerous, in my opinion, to be looking to sell down here, because here the always in bears on the smaller time frame, if you're thinking this is always in short, you got this. This is a disappointing bar if you're a bear. Bar 20 disappointed you, broke the trend line. And on a retest, you're probably going to be a buyer. If you're a bear, you're going to look to take profits at the new low, maybe below the bar. But you know the downside might be limited. The bulls did a good enough job here to end this channel, and now we're probably in a trading range, if not an opposite trend. And because of the bigger picture context, it might be an opposite trend. It might be a wedge bull flag and an overall bull trend. So probably buyers down here. 22, bull bar closing on its high, second reversal, and again, nested wedge, double bottom. I think there's a reasonable buy above bar 22. Lots of reasons to not be selling and reasons to buy. So I think bears step aside. Short for any reason, you get out above 22. I think it's an always in flipping bar if it was ever short, which I'm not sure it was. And if you're a bull and you're flat, or if you're a trader and you're flat, you can buy above 22. And if you're long, you can add on above 22. I think it's a good place to look to buy. Small follow through bar, 23, but it is breakout and follow through. The traders who sold down here are trapped, and 23 did not get back down here. Kind of reminds me of back here. If you sold anywhere in bar 2, there's not overlap with bar 4 with the low of bar 2. There's trapped traders, there's a gap, and we rallied. And similar here. You sell the close of 21, trapped on 22, try to scale in higher, but you're not really given an opportunity to exit. And how far are you going to let this get away from you before you give up on the trade if you're a bear? And if you're a bull, is there a reason to exit? I don't think so. So give up bar 24, bears exiting, bulls buying. Strong enough breakout. They were probably going at least a little bit higher. We're breaking out to a new high and closing at a new high, and that's good for the bulls. Also a pretty big bar. So again, this might reset the leg count. It's strong enough for a second leg. Most breakouts pull back, and especially one like this. I got this from Ali. Big, small, big. It's a bigger bar. Range expansion, then range compression, then 24, range expansion again. So it's two legs on a smaller time frame. One, pause or pullback. Two, and it's a more climactic second push. But because of the context, it might be a bull trend. I think it's okay to buy here or stay long here. Any reversal is probably minor. There's probably support at the 14 high and the 23 high if we get back down there. Follow through 25. But another pause. So breakout, pause, breakout, pause. Maybe one more breakout, but then it would be a parabolic wedge. 3 pushes. Parabolic wedges are minor, so you expect a minor reversal and then trend resumption. No reason to sell here. You don't want to be the first stop order bear to make money. So far, the stop order bears have had a hard time making money today. Maybe you made money selling below 16, but do you really want to sell below 16? I see the argument, triangle, might be a prolonged trend. I get it, but that's pretty much the only one. The point is, it's much easier to make money as a bull today. So parabolic wedge, 1, pause, 2, pause, 3, might be a profit maximizing area, the close of 26. Might have to pull back here. But still, not really a credible reason to sell. 27, bear bar, closing near its low, but we just had a bull breakout. And yes, it might be leg 2, 1, pullback, 2. I forgot, what about targets? For the bulls, maybe leg 1, leg 2, so we're getting close to that target. What about the wedge bull flag? Similar area right there. So there's reasons for profit taking soon, if not now. Maybe the bar 24 range, getting close to that one. So there's a cluster of resistance up here. We're starting to pull back. 27, more likely to be a minor reversal. So okay to hold long, but as far as I think about, would you sell below bar 27 on a stop order? And the answer is probably no, not after this. And that means you can hold long. So at 28, we trigger the sell, but this might already be 2 legs down. 27, pull back, and then 28. I got to wrap this one up in just a couple minutes. So that's about as far as I could get for today. But we start to go more sideways here. Kind of disappointing for the bulls. We're going more sideways. They're hoping we get trend resumption on 34, but 33 was a pretty big bar. Might need a second leg. Probably trap traders at the 32 low. Resistance here. We start to reverse back down. Still probably minor. Still always a long. Okay to be long. Also 33 looks like it might have tested. Well, not quite. There's a breakout point here we might have to get back to. Gap open. Trying to get back to it. It's probably support here. But very tight trading range through here. If you're still long, or if you're trading at all, it might be better to just be flat and wait for a breakout. Very tight trading range through here. I'm expecting support at this breakout point. There's still an open gap. Now we've had a couple attempts down, 3 or 4 legs. Finally test it. But it's a bear channel and disappointing for the bulls. They might need a trend line break and then a second reversal. 51, we got the breakout and follow through. Now the upside might be limited. This looks like a lot of trading range price action, and this might be the top of the trading range. So we might get a second leg. But now I wonder, do we need a deeper pullback? And even if we go higher, is the upside limited now? And then trying to get the bear breakout, 54. But there are more breakout points to the left. Now we have the 23 high. Probably support in this area. We tested on 55. I really got to wrap it up, but I do want to share. I feel like I've forgotten to share the trades I took for the past few reviews, so I want to go ahead and do that. And I also wanted to add, I offer a membership for my YouTube channel, and I don't even think I mentioned this. Actually, I know I didn't, because I didn't have this idea until more recently. But for the members, if you subscribe as a member to the channel, I post videos where I do more in-depth trade reviews. So the trades I take, I talk more about why I took them, what I was thinking, the math behind the trade, how I framed the trade, and sort of my thoughts, risk, reward, probability, all that. I just go more in depth rather than just saying I bought here and exited here. So that's a perk if you're interested in that. But not really. It's not necessary. Obviously, I'm going to keep doing reviews. I enjoy doing the reviews, and I get good feedback. I know they're helpful, so these will not stop. And before I get into that, I wanted to talk about this right here, Jack's price action. The reason I had the idea, well, my friend Jack gave me the idea. Why don't you do a trade review and offer that on your membership? I thought that's a great idea. And I have this tab called Jack's Price Action because this is his YouTube channel. And this guy, Jack's a lot like me. We have similar personalities, but this dude is a genius. And he's a coder, so he's done a lot of. I was in Systems Academy with him. We were in the same class, the same year. So I've been in touch with him for over a year now. And he's got this algorithm that it's basically an always-in indicator. And I don't know the details much, other than he looks at closes beyond swing points. And he gave me permission to share this. And I wanted to look at a couple charts just briefly, because I think it's so cool. And this actually isn't even the one I want to show. This is a paint bar. I like the moving average one. Well, I like the paint bar one too. I look at this from time to time. Not too much, but I just think it's really cool how it's really accurate. It's really good. There's a couple of examples. I'll know them when I see them. There were a couple days that had a lot of trading range price action on the open, but his indicator did really well. I think this was one of them. The red bars, it's always in short. Looks like a lot of trading range price action. Big down, big up, not too sure, but ultimately went a lot lower. I think there was another day like that, but the opposite. I might have passed it already. No, this is it right here. Trading range price action, but all the bars are blue, which tells you it's always in long. And sure enough, we got the bull breakout. So really interesting. But yeah, just shout out to Jack for the good idea to share trade reviews on the membership side of this page, and just shout out to this great work. I don't know too much. I know he does bar by bar reviews too with Albrick's methods, but I don't know if he shows his indicators. But yeah, I think you should check him out. I think he's an absolute genius. He's only been studying Al for I think less than 2 years, but we have good conversations about him, about Al and these methods, and yeah, he knows his stuff. So shout out to Jack. So back to this. Before I get into my trades, I wanted to talk about always in and stop orders and limit orders. So for always in today, probably always in long going into the day based on the Globex, based on the gap up itself, probably, and weak reversal attempt on the open. So always in long through here. I don't think we became always in short through here. But then probably bar 33 is enough to really disappoint traders. Strong enough second reversal. It might be always in short, 33. Not too clear. You can see we went sideways for a lot of bars. And then through here, still really not clear. Bull breakout and follow through, 51, 52. But the problem, lots of bars to the left that we're not breaking out of. And the bears hoping for a major trend reversal. Bull trend, trend line break, bars completely below the moving average, trying to get a retest. It might be a lower high, major trend reversal. But through here, always in is tough, because as soon as you think it's always in, long or short, either direction, the reason always in is really tough, I think, in trading ranges is because breakouts are minor. And when you have minor breakouts, the breakout phase of the market cycle can end really quickly, and then you can get really deep pullbacks. So for example, 33 might be always in short, but look to the left, more bullish environment, and it looks like a trading range at the bottom of this range. So it might be always in short 33. What does always in short mean? It means you're probably going to get a second leg in the direction that you said. So always in short, probably we'll get a second leg down, but then the breakout phase is over, we get a deep pullback, we test the gap. Gaps get tested in trading ranges, that's common. And then you get the second leg, spike, deep pullback, channel, bull breakout, and follow through. Is it always in long? Well, this is probably going to get a second leg, but not before there's a really deep pullback, even below the breakout. But sure enough, the bulls got their second leg up here. So that's the problem with always in with trading ranges. So it's better to look to buy low and sell high. Stop orders today. I think there's a stop order buy above 3, 4, 5, 6, maybe even 7. $12, okay, but expecting a second leg after 11, so it might be better to look for a second reversal up. And then after this, don't want to buy above 19. Let me back up. Stop order sell here. For me, not so much. I think the environment is too bullish and the signal bar is weak. Context isn't that great. It's okay for maybe a scalp, but not worth taking for a swing here for me. And then wouldn't buy above 19, bad signal bar, and 4 consecutive bear bars, second leg down likely, but 22 I thought was, 22 might have been the trade of the day in my book. I think that's just a really clean wedge bull flag to the moving average and a pretty strong bull trend. And then you can buy above 23, 24, 25, 26, but disappointment. So you start to exit up here, similar to over here. And then stop orders through here, not ideal at all. Lots of overlap, small bars, and prominent tails. So for me, through here, not really stop order territory. But after here, maybe 3 legs down, reversal bar. Maybe you buy above 61, 62, if you prefer a bull bar closing on its high, but you're still scalping because it's big up, big down. Now you're low in the range, and there's trap traders up here. So the upside is limited. So 67, pretty good bar, but after all this buying, I would prefer a second reversal. So probably not great 67, but maybe you sell below 70 or 72. I think 73 or 74 rather is okay. Breakout follow through. And that's about it for stop orders. So for limit orders today, buyers below 2, buyers below 6, buyers below 10, sellers above 11 and 10. Probably buyers below here. This is a ledge. 4 prices at the same price level there. You can see we tested it and rallied, but disappointing entry bar. There's a limit order short above 19 for a scalp. Probably buyers below 27, first reversal after a strong breakout. 3 legs up, 27, 29, or 31, and then, or maybe it's 27, 29, 31. There's a limit order sell at these highs, 3 legs up, tight trading range, triangle. But then a buy below 28, spike, pullback channel, bottom of a trading range down here. I don't think we quite got there on 33. All limit order trades through here. You're betting on breakouts failing. So you see a breakout bar, you do the opposite. Big bear bar, buy the close. Big bull bar, sell the close. Buy below bars, sell above bars, back and forth. So the better, for me, in my opinion, the better limit order trades. Probably reasonable to buy below 51 or 50, but who knows, maybe you pull the order. 54, too much momentum, needs a second leg down. But then leg 1, pullback. Leg 2, maybe you buy below these lows, betting the bears get their minimum second leg. But overall, it's a trading range. And then 54, there's a gap. So a 3-bar micro channel, not very strong. Pretty weak bar, 53. Bull bar, 55, but there is a gap. If we look at the gap, this is the functional price level, 53 low. We tested on 59, second leg down. Limit order sells. You're at the top of the range, but none of them are triggering, which is sort of a sign of urgency. There's a micro channel here. It's subtle, but stop order is not triggering up here. 75 is a bad stop order buy, limit order sell. And that's about it for me. So for me today, my trades, one trade I took was, I'm trading a breakout and second leg system, and I'm focusing on 3-bar micro channel signals. So I had a signal on bar 5, and I don't like buy the close, and maybe I just haven't figured that out for myself yet, but I prefer to buy a pullback. So when 7 pulled back, and I'm also restricting myself to stop orders only. So 7 pulled back, I bought above 7, disappointing follow through, and I ended up exiting during 14 at the close of 10 on that trade. And then same signal but more complex pullback, I bought above 22 and I exited that one below bar 30, second reversal. That one was tough for me. It was a tough call. I thought 30 was such a bad sell that it was hard to exit my long below it, but it's a second reversal, so it meets my exit criteria. It turned out to be a pretty good location to exit. So all good with me today. And then for tomorrow, yes, we are rallying, but every breakout, because it's fractal, and because everything has an opposite, and there's traders trading for every imaginable reason on any time frame, any and all time frames, and even not even looking at charts, you really have to consider things that might even sound crazy, like, and I don't even know how to articulate this one or explain it well, but I almost want to say that every leg 1 is a leg 3, and every leg 3 is a leg 1, depending on your perspective. So here, this might be a leg one breakout to a bull who sees 3 legs down and then a rally with no technical pullbacks. Another trader on a smaller time frame might see a bull breakout, a pause, a pullback, another breakout, another pullback, and then a third push up. So one trader might see leg one, but late or high in leg one. Another trader sees 3 pushes up. So not really great selling pressure through here. We have open gaps and we have prices that we can test higher to the left. So I'm not excited about selling during this, even though we might be getting high in the range. We're testing that breakout point here, but right now closing above it. And again, the approach is sort of strong. Even though you can count 3 legs, it's so tight that you know it's a breakout. The traders that see 3 legs are looking at a lower time frame, and it's still a pretty tight 3 legs. It's a parabolic wedge, and on this time frame, it's a simple leg. There's no pullbacks, so it's a breakout. So what are my expectations? I think we'll start to hesitate here. We're in an area where traders got trapped. Bulls buying up here, suffered this deep drawdown, and a bear who missed the sell. They might be looking to sell where we fell the last time. So probably resistance in this area will start to slow down. You add in the fact that it might be 3 legs up. We might get a minor reversal. I don't think we'll get anything crazy because I think the bulls need a second leg up after this rally. So I think we'll probably start to disappoint the bulls tomorrow, as we already did today. Lots of trading range price action into the end of the day. So I'm expecting more trading range tomorrow. But that is it for me today. So thanks everybody for watching. I appreciate it. And I'll talk to everybody soon.